Hi dear traders, despite the ongoing political challenges in the US, American traders are keeping a positive outlook. The S&P stock index has once again hit a new all-time high, largely thanks to corporate reports indicating profit growth exceeding forecasts. It seems that to boost the American stock market quotes further, expectations need to be set lower. The currency market is experiencing a similar trend. Last year ended with speculations that the US Fed would start cutting rates in March. However, the new year has seen the dollar strengthen following assumptions that the start of monetary policy easing could be pushed back to summer. The US dollar index, which indicates the dollar's position against a basket of 6 other major currencies, ended the week positively with a modest increase of 0.18%. Preliminary assessments of the US economic growth continue to show resilience and the ability to withstand a period of high rates. This Wednesday, the Fed will announce its decisions on future monetary policy, and in anticipation of this event, the dollar is likely to continue gaining strength. The highest dollar buying activity is noticeable in the euro-dollar currency pair movement. Last trading week saw the euro-dollar quote drop to its lowest level since mid-December. The euro weakened not only due to a stronger dollar, but also amid the rhetoric of European Central Bank President Christine Lagarde. She highlighted the need for economic stimulus in the form of rate cuts. The Eurozone economy is in crisis, with consumer and business sentiments in Germany, the powerhouse of Europe, at their lowest. Moreover, the threat of recession remains evident. Meanwhile, the British pound is feeling more confident. Data on business activity convinced investors that the Bank of England might not rush to cut rates. The British economy is faring relatively well compared to the Eurozone. Markets expect the UK Central Bank to begin easing its policy later than its counterparts in the Eurozone and the US, maintaining traders' interest in the pound. The Japanese currency, however, cannot boast such trader confidence. The Bank of Japan maintains its rate in the negative zone to support local business and consumption. However, last week there were unexpected speculations about a possible change in the monetary policy. The Bank of Japan's Governor Kazuo Ueda sees the likelihood of achieving the main condition for raising rates. The inflation level might be sustainable at 2% due to upcoming wage increases. If this trend continues, according to Mr. Ueda, the Bank of Japan is ready to reconsider its monetary policy course. Gold traditionally reacts to speculations regarding interest rates. Lower central bank rates decrease bond yields, prompting investors to move their capital from the debt market to more profitable and secure assets like gold. However, the opposite happened last week. Speculations about delaying the rate cut to later date led to a decrease in gold prices. Oil seems to have finally responded to global events, reaching its 2-month highs. This surge is driven by positive data on the American economy and strong corporate reports, indicating a continuation of positive momentum. Additionally, a reduction in U.S. oil inventories has been noted. The issue of supply deficit is back in focus due to the escalating political conflict between Washington and Texas, a major oil-producing state in the U.S. This comes at a time when risks to supply through the Red Sea persist as U.S. and British forces launch new strikes on Houthi targets in Yemen. These are the trends of the last trading week. Do not miss our daily news reports to be always in touch with the latest events. See you!